Israel strike on Iran and all of that really weighing on different asset classes and bond yields in particular?
We're certainly seeing a modest uptick in repricing risk, especially in the energy space. I think geopolitical risk and energy prices have joined U.S. interest rates on the higher for longer category. But certainly, what I've observed over the years is a desire to return to the glass being half full as soon as possible. So it'll take a fairly abrupt geopolitical event or a really odd US GDP number, I think, for markets to really sort of move aggressively away from their current positioning.
Okay, thank you so much, Cameron, for sharing with us your thoughts on all that's happening across the globe. In fact, let's take stock of all of that. We've got commentary as well coming in, and Vinny is joining in to walk us through that. Vinny?
Absolutely. So, good morning, and let's talk about some of the important commentaries that's coming from some of the central bank commentators. Now, we do have ECB's Malo saying that more ECB cuts after June could be reasonable this year, not before that. ECB actually will start loosening its monetary policy, but that shouldn't be too quickly. That's a word coming in from Malo, and he thinks that they don't need to think about 50 basis point cuts, and that's what he thinks, that no need to think about that so far. A lower cut is also something that is possible. Other than that, we have ECB's saying that ECB's decision will get harder after 2 rate cuts, and July meeting will be a signal on the rate path of what path they will be taking. Oil prices, that's something that they're keeping an eye out on, given that we've seen a sharp surge coming in the recent times because of the geopolitical tension in the crude oil prices. That's something they would be keeping an eye out on. And obviously, other than that, we have BOJ's governor who's highlighting that they will reduce the JGB buying at an unspecified timing in the future, though policy shift is something that will lead to higher odds of reaching the price goal. They expect these financial conditions actually to continue for a while, so let's keep an eye on that. Lastly, we have Fed's Goolsbee, who is highlighting that they are keeping a close eye on the progress of the inflation that has been stalled a bit. So yes, rate cut is something they will be keeping an eye out on, but it makes sense to actually wait before rushing into a rate cut, given that we've seen such volatility in the prices and inflation concerns still coming back. So yes, keeping an eye out on that.
For that, Vinny, let's find out what our chartists make of the trade setup. We've got Kunal Bothra joining in as always, as well as Naresh Mirani. And Kunal, perhaps Friday was the saving grace, the fact that there was a nice 300-point recovery from the day's low. How are you reading into that in light of the fact that it's expiry week?
Good morning. So, I think there are 2 points which are very, very important for the index in terms of the positioning over the last couple of weeks of price correction, as well as relatively with respect to the previous swing lows. So in the month of February, March, when the markets also went to a correction, 21,750 was the low which the index had tested. We managed to bounce back almost closer to those levels even on Friday, where we saw the index making a low of 21,700, I think 80 approximately, and then bouncing off almost 300 points intraday. Now, there are 2 important points over here. One is that there was evidence of short covering across both the indices, Nifty as well as Bank Nifty, and on a relative basis or on a net basis with respect to the next expiry also, because the rollovers would have already started for the index future. So I think in that aspect, that was a very comforting sign to see finally some round of short covering into the stocks as well as on the index front. And then on the candlestick front, we formed a bullish piercing pattern on the Nifty as well as on the Bank Nifty on the daily chart. So that's another indicator of a possible major short-term bottom in place for the index. So on the back of both of these key technical factors, I would expect at least a few more days of follow-through up move. 22,500 is what I would expect as a target on the Nifty for the very near term.
Right. Naresh, hi, morning. It'll be all about HDFC Bank and the reaction that it has to its earnings. Tell me, what are the charts indicating?
So the charts are still stuck in that band wherein we broke out above the 1470 mark, which should act as a support, 1450, 1470. On the upside, 1600 remains a major problem. So we could be just being in this range for the next few weeks or months together. But closer to 1450, 1470 is what I would watch out for. If the stock sustains those levels, then maybe slowly there could be a bounce back. Overall, the stock is yet far away from a major trend change. for the last 4 years, 1600, 1700, mainly 1700 has been a major resistance, 1300, 1350 has been a support. So for now, it's a major range problem for the stock going forward for many months together. But it still remains a buy on major dips for a bounce back trade, given that it is one of the largest weights in the index.
Okay, let's nail it down to those stock-specific calls. What's looking good today? And Kunal, run us through your list.
I'll go with two buy calls on the larger cap front. The first stock which I would suggest, would be a stock which we discussed on Friday as well, Bajaj Finance. That's a stock which recovered quite well. Again, a very strong bullish candlestick formation with the stock had shown, engulfing almost 3 days of consecutive negativity for the stock price. So that's an indication of further up move which could be possible for the stock today as well. 7,250 as a target, stop loss at 7,020. And Escorts is something which has given a price volume breakout, more of a swing pattern breakout for the stock on the daily chart. So which says to buy 3,205 as a target, stop loss at 3,080.
Right, Naresh, what about your stock strategies?
So two auto names on the breakout list. First is a buy on Eicher Motors. The stock has broken out above the 4,000, 4,200 mark, as well as into new all-time highs. Clean breakout, multi-months of consolidation, very similar to what happened with the rest of the auto names. Started off with TVS Motors, then Bajaj Auto, then Hero MotoCorp. And now Eicher Motors seems to be the next leader in the two-wheeler pack. So breakout done, I would expect a continuation towards 4,800, stop loss at 4,250. Second is a buy on Escorts Kubota. The stock has clearly shown relative strength over the last few weeks. Did not correct even when the markets corrected much, was first of the block to make a new swing high. Has made a flag formation here above that 3,150, 3,200 mark should be a further move. So out here a buy with a stop loss at 3,000 and a target price of 3,400, 3,500 in the short term.
All right, thanks very much. Those are all your top recommendations that our chartists are flagging off. Let's nail it down to those stock-specific calls. Lots to watch in today's trading session, and Sumit's here to walk us through that. There's, of course, Reliance Industries, but GSPL as well, Sumit, in focus with PNGRB's reviews.
Well, yes, that stock will remain in focus because PNGRB has reviewed the high pressure pipeline tariff rates for the company. Now, the new tariff rates will be 18.1 rupees per MMBTU, and this will be effective from the 1st of May. Now, what is important here is that the tariff cut has been nearly 47% compared to what the tariffs were earlier at around 34 rupees per MMBTU. And GSPL had asked for a tariff of around 50.77 rupees. As against this, PNGRB has approved a tariff of just 18.1 rupees. So that's a cut of nearly 64% compared to what GSPL was asking. Now, why this cut has come in from PNGRB side? Firstly, PNGRB is expecting lower future capital expenditure at around 1,800 crore rupees as against 3,400 crore rupees projected by GSPL. Apart from that, PNGRB is also expecting lower operational costs going forward for its existing pipeline and also for the newer pipelines that are expected to come in. And the most important part here is PNGRB is expecting high utilization levels for pipes at around of this pipelines at around 87% as against 75% projected by GSPL. Now, because of this higher utilization levels, there has been a key disagreement on volume expectation. Now, PNGRB is expecting volumes to be around 31.7 MMSCMD over FY25 to FY22, while GSPL had factored in a volume of just 26 MMSCMD. And because of this volume difference, the prices have seen the biggest cut that have come in compared to what the street was expecting. Now, given the fact that there is a big difference in the volume factor, PNGRB has also stated that in the next financial year, they will again review the tariffs depending on what are the actual volumes and what are the projected volumes. Now, do remember for the first 10 months of FY24, volumes were actually around 31 MMSCMD. So, if volumes continue with this trend, the tariffs actually won't be revised higher even going forward. Now, because of this cut in tariff, analysts have lowered their EPS estimate for GSPL by around 30% and they are also saying that the return on capital employed would come down to around 11% from 24% what the company was used to do on an average over FY19 to FY23. Most of the analysts have reduced their rating, downgraded their rating to sell when it comes to GSPL, be it Equirus, ICICI Securities, Kotak Securities, CLSA, MK. Everyone have downgraded their rating on GSPL to sell and have cut the target price anywhere between 11 to 26%. So that's the stock that would remain in focus in trade today.
See, like the most cheery consensus of GSPL was buy. I think there were only buy reports.
Well, yes, most of them had a buy report.
All the buy has become, everything now will just move 180 degree.
Right.
And one policy move can have this kind of an impact when it comes to PSU. Now, whether we call it risk or we may call it the underlying, the underlying pain point for all PSUs, policy changes can have a very large impact in the way how the near-term businesses would do. Now, you cannot sugarcoat what's happened. The point is that do you want to buy the stock on a decline? The answer to that is absolutely no. I guess the stock, when such a large policy change has happened in the near term, will remain intense pressure, and I don't think contra buyer or buyer will actually come back in a hurry. Now that's the disadvantage when you're investing in a PSU, that one stroke of pen and literally the fortunes can actually change. And I think 377, it really would be a massive gap down. It could be 10%, 15%, and I think that in the near term, the stock will remain on the butcher block for an extended period of time. You don't want to buy the fall, let me put it this way, because the policy and the terrain and the profitability projections for FY25 and beyond that have changed.
Okay, and the big one, even though Elon Musk has postponed his trip, there was a lot of anticipation that perhaps, there's going to be that announcement which is going to coincide with his visit, but the announcement can still come. What's the expectation on RIL?
Well, on the result front, it is expected to be a stable set of numbers. Revenues are expected to be high by around 4%, EBITDA around 4.5% higher. Margins are expected to be stable. Net profit is expected to be high by 5.5% compared to last quarter. Now, segment-wise, if you see, in fact, the company is expected to report a highest ever quarterly EBITDA, and this will be aided completely by the O2C segment, that is the oil to chemical segment, and because of the growth that we will be seeing in the telecom segment. Now, oil to chemical segment is expected to report a sequential growth of around 13%, but that will be on the back of higher refining margins, higher throughput, and better petrochemical spreads on a sequential basis. Now, throughput is higher on a sequential basis because in the previous quarter, that is the third quarter, there was a planned maintenance shutdown, and hence we are seeing this kind of a jump coming in on the O2C segment. The retail segment revenue growth is expected to be around 1%, but on the EBITDA front there could be a decline. But do remember that on a sequential basis, if you see, third quarter was a strong festive season quarter, and hence we are seeing this decline. Overall, the retail segments are also expected to be stable. When it comes to the gas exploration business, that could see a decline on the EBITDA front of around 3% on a sequential basis because output and gas prices are pretty much stable, but government's profit sharing has increased on a sequential basis, and hence we are seeing this kind of a decline. Now, the telecom business, which will also see a growth of around 2.5% odd on the EBITDA front. Now, this entire growth for the telecom business is yet again coming in because of the high subscriber number. Total subscribers are expected to be around 48.1 crore as against 47.1 crore in the previous quarter. ARPUs are expected to be flat. This is the 8th consecutive quarter where the company is reporting a subscriber growth, and again the entire growth is purely on the back of subscriber growth that we are seeing for Reliance Jio. So to sum it up, O2C and telecom segment will support the growth, while the other segments would report a pretty much a stable set of numbers in the fourth quarter.
See, Reliance has been a performing stock this year. Let's look at Nifty's YTD performance and Reliance. Reliance has given you double-digit returns. Nifty is like about 2.5 to 3%. So Reliance has been a massive outperformer. The outperformance in Reliance has nothing to do with what we are expected to, what the numbers are likely to be, or what they would do in next one quarter. Again, there are flows which are migrating away from large cap IT and some financial stocks back into Reliance. And irrespective of what the positioning of Reliance is, telecom will do better, but telecom and retail is likely to do better, but the O2C business is something which will see what could be called as global cyclicality. That is not the reason why Reliance stock is outperforming. Reliance stock is outperforming because markets expect that FY26 and beyond, a lot of unlocking will happen. The stock is looking cheap. Their capex cycle seems to be coming to an end. So irrespective of what the numbers are, I guess in the near term, the reaction to the Reliance stock is not going to be a very meaningful one. So I think numbers will just come and go, and tomorrow when the stock will react to numbers, it may not be a large swing number. Unlike what we've seen, let's say with the Infosys or HDFC Bank last quarter, these numbers for the overall setup of Reliance are unlikely to have a very large impact per se, because the run-up in the stock has been irrespective of what the quarterly performance is, in fact, markets are betting on.
All right, there you have it. That's what the street will closely be eyeing. Samit, thanks very much for joining in with those newsmakers. Time for a very short break. We've got lots lined up. Don't go anywhere.
association with Volta Smart Air AC. शोर कम, काम ज़्यादा. In association with State Bank of India, the banker to every Indian.
Kia, movement that inspires.
Sir, आप इतने कलरफुल हो, but how can colorful be powerful?
Follow me. बारिश का प्रेशर बढ़ेगा, पर इसको कोई फर्क नहीं पड़ेगा. Dulux Weather Shield Power Flex.
इसका हर रंग लड़े धूप, धूल और बारिश से.
It's colorful. It's powerful.
छत टपक रही.
अरे शिफ्ट करने वाले हैं ना पापा, बस घर मिलने की देर है.
इसीलिए तो घर मैजिक ब्रिक्स पे देखिए. प्रॉपर्टी की पूरी इन्फॉर्मेशन विद एक्सपर्ट एडवाइस.
और 15 लाख से ज्यादा प्रॉपर्टी ऑप्शंस हैं.
गुड. एटलीस्ट मेरा घर तो लाखों में होगा.
You are the shimmer of untold dreams. The glitter of innumerable stars. The key and the melodious note. The soft laughter of the jewels. The brilliance of the treasure trove. You are the gem that knows its own radiance. Antara Celebration Diamonds from Kalyan Jewelers.
And nothing should stop our soldiers from marching forward. To make this possible, somewhere a strong bridge has been built. At Ultratech, India's #1 cement, we believe that to keep growing, India needs to keep building. Ultratech Cement. As India builds, India grows.
Back with the market right here on ET now. Today is all going to be about HDFC Bank's reaction after the earnings came out over the weekend. Let me take it across to Rahul Malani and find out how the market is likely to absorb these numbers. Rahul, hi, morning. Not good, not bad, just about in line. How you read into HDFC Bank's performance?
So firstly, good morning. So we continually reiterated that FY25 year will be another period of transitions. But as far as the numbers are concerned for Q4, it was a decent outcome considering the transition period. Asset growth has been calibrated while managing the liquidity as well as the loan deposit ratios. While despite the tight liquidity conditions, outcome on NIMs and as well as the deposit mobilization was excellent. So whatever the things were dismantled during the Q3 or have been taken into account into Q4 and is in line with the transition period and the guidance which they have earlier alluded. So this is the best outcome which could have in during the transition period.
Rahul, from the sub 1400 levels, the stock is now, well above that 1500 mark. Would you say that the price correction is over? And more importantly, are the earnings meaningful enough for the stock to jump up significantly higher from here? Because many believe that, now we're going to see some time-wise correction play out.
So we continue to believe that the stock will continue to have a range bound between 1400 to 1600. Until and unless in FY26 we see very gradual recovery in some of the key metrics like growth as well as the progression of NIMs, as well as sustainable deposit mobilization would be key monitor. But in FY25 we continue to see a range bound movement for the stock.
Are you expecting perhaps, the bank to gain market share over an extended period, or is that going to be a challenge?
See, if we look at the current data also, In terms of deposits, it has been continuously gaining market share at around 18 to 20%, versus the overall market share around slightly above 11%. And in terms of loans also, we do not anticipate improvement in the market share of loan, but ultimately we should see deposit growth, higher market share in deposit growth, and the need of the R is to mobilize higher deposit in order to normalize the LDR ratios.
All right, thanks so much for joining in, Rahul, and giving us a view on HDFC Bank's numbers. It's a mixed take coming in from the entire brokerage community. But let's put the spotlight on other big earnings. It was a decent quarter for Wipro in the quarter gone by, as the profits and margins beat street estimates. Revenues were in line. Let's get in Anisha to dissect those quarterly numbers for us. She joins in. Anisha?
Well, it was a decent quarter from Wipro this time around, largely in line with expectation to actually slightly better on the operating basis, because the dollar revenue was in line with expectation at $2,650 million thereabout. The rupee revenue was also broadly in line at around 22,080 crore rupees coming in, a little below the expectation. Margins, however, were better. The margin performance came in at 16.4% versus our expectation of 16%, and that's why the profitability is also looking healthy. The other good news coming in is, of course, the kind of growth that the company has delivered in terms of the bookings as well, because if you look at the overall booking number that has come in this quarter, it's $3.6 billion, largely in line with what we have seen in terms of the average as well. The attrition has come off a bit. Yes, on a quarter-on-quarter basis, there is a dip in headcount, but that's something that we have seen across the board with all the IT companies, so this is not very surprising. The constant currency decline this quarter was around 0.3% versus our expectation of a decline of 0.4%, so broadly in line with expectations. What's actually important to note is the kind of commentary coming in for the coming quarter, and there the company is guided for a downside of 1.5% to a growth of around 0.5%. Street was factoring in -1 to +1 kind of performance, so smidge below that. But given the fact that the performance from the rest of the IT peers has been weak and the commentary hasn't really elevated yet, maybe this is something that the street will take well, and that's why they're talking about revenue of around 2.6 billion to 2.67 billion in the coming quarters. So that's something to watch out for. So overall, a decent set coming in given the environment and the performance of the peers.
Right, okay, let me take it across to Snehi as well. Find out what are the other stocks in focus this Monday morning. Snehi?
Well, yes, hi, good morning. Let's take a look at the stocks that will be in focus today. First, on the earnings front, Persistent System will be in focus. PAT has come in at 315 crore, which is an uptick of 25.5% on a year-on-year basis, which is largely in line with what the street was expecting. Sterling and Wilson revenue has grown significantly both on a year-on-year basis as well as sequentially, and EBITDA has turned positive for the company as well. Jio Financial Q4 net profit is up 6% at 311 crores on a sequential basis. Good numbers coming in over there as well. Outside of earnings then, more stocks that will be in focus. First one will be Zomato. They've hiked their platform fee to 5 rupees per order. They've also gone ahead and suspended their intercity food delivery service called Intercity Legend. So we'll see how that pans out for the stock today. Laurus Labs will be the next stock in focus. US FDA inspection at their Andhra plant has concluded without any Form 483 observation. So that's a key positive news coming in for Laurus Labs as well. Moving on, JSW Energy has received an LOA from NTPC to set up a 700 megawatt connected solar capacity as well. So positive news coming in for JSW Energy as well. Lastly, we'll also be closely watching out on Sterlite Tech because an arbitrator has rejected the company's claims worth 145 crore against BSNL in an optical fiber cable laying project. Negative news coming in on that front as well. So lots of news to watch out for, lots of stocks to watch out for in today's trading session. So keep a close eye on these stocks.
Right, okay. Let me also welcome on board Sanjiv Bhasin and find out what he's making of the market this week. Sanjiv, hi, good morning. Good to have you on the show as always. Sanjiv, I guess all eyes on HDFC Bank and, nothing to say that the stock is going to push higher. No dhamaka in the earnings. What do you think the stock is going to do now?
Yeah, good morning, Aisha. Well, HDFC Bank was the star which pulled out of the throes of 21,800 or 21,777, and I think that numbers were in line. Now you cannot make a spectacular case because they've clearly indicated the CDR ratio is on its way down and it will take a couple of quarters. what you have to give them credit for is that they are adjusting one of the largest mortgage lenders into the book, and it takes a couple of quarters. So I think, like you said, the stock will do maybe nothing much. It's not going to see much downside because they have indicated that we know deposits are on the weaker side, and that's across the board. So as the liability franchise improves, as we see more color on the NIMs expanding, because they've not raised rates just to protect their margins. So I think inline numbers, inline performance, that's what the idea is. If you get it on a decline, it's a buy for me.
Okay, fair enough. That's the view coming in on HDFC Bank, a buy if there is a decline. Sanjiv, morning. Let's also get in your thoughts then on Reliance Industries. Of course, we were expecting the numbers to coincide with Elon Musk's visit, which has now been postponed. So maybe some announcement on that front. But overall, what are you expecting from numbers?
Yeah, good morning, Avan. For me, today's day belongs only to IDEA, IDEA. This FPO is your only opportunity to get this stock at 11. This is going to be the stock of the year, 1 year target 25. Look, my people are misreading the debt and everything overblown. There is just an outstanding of something like 3,800 crores which they have towards bank. Majority of the debt is been converted into equity on interest because of the government taking stake. And the government is also very gung-ho that they are in the way of raising funds, which is going to give capital for 5G and the others. For me, the stock of the day, stock of the month, stock of the year and the next 2 years is Idea Voda. You cannot but make money. So put all your money at 11 rupees. You cannot but be successful. That is my top pick. Coming to Reliance, I think we will see numbers which will be reasonably good. ARPUs are going to see an upside. By the way, Voda's ARPUs come at 142 in the last quarter, which I think over the next 2 quarters can even go up to 180, 190, which will again be a big cushion. We will watch for Jio's earnings. We will watch for the ARPU, which is very positive. And thirdly, their retail and energy arms, because if you see the numbers from SW Solar, which is owned by largely by Reliance Energy, then I think some of parts we could be pleasantly confident of Reliance outperformance. However, the problem is going to be more on the OTC side, where again you've seen a fluctuation in oil prices, which can be see some pressure on the margin. But overall, I would say inline numbers.
Okay, inline numbers there for Reliance. That's what one can anticipate. And yes, Idea Vodafone, that's going to be the stock of the year according to Sanjiv Bhasin. Sanjiv, what else within mid and small caps are you recommending right now for our viewers to buy?
So, Aisha, firstly, investors generally miss the woods for the trees. Firstly, put all your effort in Idea. You're getting an opportunity of a large IPO where allotment will be more or less, in a very good ratio. So Idea is the top pick. Aside from that, I think silver prices are headed higher. We've been very bullish on Vedanta, and by the grace of God, that has been a huge outperformer. I see 450 coming on Vedanta. I'm very bullish on Maruti, where I think 13,500 could come by the earnings. And lastly, India Bull Real Estate, which for me will again be the stock of the year, given that the inventory which they had, and now with the promoters putting in, very, very marquee names, putting in almost 4,000 crore commitment, you cannot but have real estate be the, theme, and this stock underperform in a big way. I think here the market cap discount is very, very substantial. And if only thing, I can see a doubling of this stock in this year itself.
Okay, there you have it. That's very strong conviction coming in for some of Sanjeev's picks. But let's get in a take then on the charts. And Kunal, would like to get in your thoughts. Bajaj Finance scaled up on Friday's trading day. And then some of the automakers like an M&M or a Maruti Suzuki as well held out. What do the charts indicate?
Well, yeah, very attractive charts. For example, Bajaj Finance, I think the stock had been falling for the last 4 or 5 days prior to this, up move on Friday. And I think the stock corrected from 7,000 to 5,300 levels towards a point when the stock was on touching distance of breaking the 6,800 mark. So after a 350 odd point correction, this is a very good recovery candlestick for Bajaj Finance, and this could probably indicate that what we saw in the last 4 or 5 days of the mild price correction could probably be termed as a false move for the stock on the downside. and the stock should break out on the uptrend. So I would believe that the stock looks very attractive, and I think even if the stock opens with a mild bit of a gap up, I think traders should look at a buy, especially from the positional play. Would look out for higher targets of 7,500 to even potentially 7,800 plus mark gradually over the next few weeks. For automakers also, I think the move has been very stable and strong. So when you look at the charts, for example, for the likes of M&M, Maruti, you even add to that the likes of Escorts, Tata Motors, etc. These stocks have been doing reasonably well. There was a very mild degree of volatility for these stocks, just a 5% odd correction for both of these names over the last, I think, few weeks. And the recovery for these stocks has been on the first side, and you've seen the stocks coming back towards or retesting their previous swing highs. So both the charts are very attractive. Maruti is something which I would probably recommend from current levels.
Okay, there you have it. That's the view coming in from Kunal on some of those stocks in trade. Meantime, let's get in your views, Sanjeev, on the PNGRB reviewing the grid tariff. The likes of a GSPL will be in the spotlight. How are you reading into the news?
Well, that's the risk you have of regulatory, authorities playing up and down on some of these things, which are very, very dependent on the tariffs and the rates. And this leaves a little bit of a dampener in the foreigners play, because if you invest largely on the basis that there is going to be consistency in a large number of regulatory manners, this can be a spoke in the spanner. Hence, I think there will be a little bit of a volatile session maybe today, and that then we will see what the outcome is, because the impact will clearly be on the numbers. I still think GAIL is one of the best picks we have there, and we think GAIL can be a huge outperformer. However, as a caveat, GAIL has been our pick from 125, 130 at 200. Risk reward is not in your favor, but I think GAIL can still be a relative outperformer. On the others, we have an avoid.
Right, okay. Some news from the pharma universe as well. And Lupin and Zydus Life launched a drug in the US that treats overactive bladder. Let me take it across to Shrishti and find out more about this announcement and what really does it mean for both Zydus as well as Lupin.
Well, yes, Lupin and Zydus both are in the focus because both the companies have launched a drug in the US, which is believed to be a big opportunity drug. They have launched Mirabegron extended release tablets in the US, which is a drug used for the treatment of overactive bladder, and it is a generic equivalent of a drug produced by Astellas Pharma Global Development. Now, Lupin and Zydus, for now, they have launched a drug of a strength 25 milligrams. Both the companies do have the approval of 50 milligrams as well, which is expected to be launched in the times ahead. Now, just to give you a perspective, Lupin does say that this 25 milligrams of strength has an estimated sales of $1,019 million in the US, and combined sales of 25 as well as 50 milligrams is at $2.42 billion in the US. So it is indeed a big opportunity sized drug, and not just Lupin and Zydus. In the times ahead, we can see more competition because Aurobindo Pharma too has a tentative approval for 50 milligram. Now, let's talk about the expected revenue from these drugs. Now, Antic believes that for Lupin, the company is expected to generate around 5